posts and updates on stories throughout the day. And why not share your thoughts by posting your comments? Plus, follow News 12 reporters on Facebook as they share what goes on behind the scenes and give you a glimpse at the stories they're working on before they air.
State buildings on Long Island are open only for a week.
News 12 Long Island. We live here, we work here, we get it.
And you just saw that ad right there. It's a company with nearly 1 billion users. But is Facebook really a business worth putting your hard-earned money into? Welcome back, everyone. It's a question investors around the world are now asking themselves. Will Facebook stock actually be a good buy? Shares of the social media giant are expected to be available on the NASDAQ Friday. And it's expected to be one of the largest initial public offerings in history. Joining me now is Michael Kresch, certified financial planner and president of Creative Wealth Management in Islandia. Appreciate your time as always.
It's always good to be here.
Yeah. Okay. Let's first. I find this interesting. Right now, they've released that it's going to be about $38 a share.
$38 a share, and it's going to start trading at 11 a.m. The people who are paying $38 a share already have their allocations, so they have it.
Yeah. So you and I mean, I can't buy.
Well, if you have an extra 25 million, we can talk to some people and make a deal. The average investor is nowhere near close to being able to touch this. And even the institutional investors are not getting the allocation that they want because there's not enough to go around.
So who is getting Facebook at $38 a share?
Okay, it's the clients of the big underwriters, the companies that's bringing it public. So you're talking about Morgan Stanley, Goldman Sachs, and a couple of the major firms, and their best elite clients who give them the most amount of profit get first pick. So you're going to see the large mutual funds being involved, some hedge funds being involved, and then of course any ultra high net worth investor who says to their guy, I want some, they're going to have to get it.
So they're going to already have taken their stock before
before trade. So they're all going to have it in their pocket, and they know what price they're going to pay.
So
everybody else is open to what the universe is going to do to them tomorrow, and this is going to be a very good game to watch, not necessarily a good game to play.
Okay, so when Friday opens up, I'm not going to pay $38 a share for this, right?
Well, the first trade theoretically will be $38 a share, but the way it works is that all the trades that are going to be put in, they're going to be put in based on, most people are going to be able to get it based on what they call an open market order, which means that they're going to say, I want to buy it at the next available price. That's going to be an imbalance. Who knows what that first trade is going to be? And unless you're buying an enormous amount, you're going to start falling down the line, and you could be the 10,000th or the millionth person to get an order processed. And by then it could be 50 a share or 60 a share, at least temporarily. So unless you say specifically, if you're really silly enough to buy this, that I won't spend more than X, maybe you say that I'll buy it at 39. You won't get it at 39. But you'll buy it at 39, but you won't be paying more than that, so you'll end up not getting it at all. But unless you do something like that, you have no idea what you're going to get it at, and you may have no idea what it's going to be worth by the time it processes.
Okay, and I want to follow up on something you just said. You said if you're silly enough to do this, what is it about? Let's first talk about what is it about Facebook? I mean, this is going to be one of the largest IPOs in history. What is it about Facebook that creates this type of hype?
Well, think about it. What other company in 6 years has had a major book about it, a movie about it? You guys, everybody in the world knows the name, and they have 800 million active users. So from the standpoint of visibility, from the standpoint of hype, there's nothing at all like it. But that's a hell of a lot different, or a heck of a lot different, I want to say, than how they make money. Because they provide a service that a lot of people like to use, but they're trying to advertise very, very quietly and passively. And that keeps their advertising revenues very, very small.
And that's interesting. Let's talk about that, because as people move to the mobile devices now, that ad revenue, I mean, it's very tough to advertise on a mobile phone in Facebook when you're Facebooking. GM, General Motors, already pulled all of their ads off of Facebook. Is it hype? I mean, is this a company worth investing into?
No, the answer is not. I mean, not at this price. The concept is very, very fascinating. But for an investor, particularly a small investor, and I mean by a small investor, you don't have $1 million to play with. Very different here. There's really not a good overall value here because it's already, so many people are so excited, they're buying. It's like you were told the housing market's going to crash in 18 months, but you're sitting there 18 months early, and you're lining up to buy a house anyway because the house price is going up. This is something similar to that. The issue here is everybody is super excited. When everybody is super excited, they bid up the price. Then the value isn't really there. So the question then becomes, is this company going to be good in the future? And you already pointed out, it's harder and harder to make advertising dollars, and they're already having major advertisers say, I'm not getting value for what I'm paying them. And if that happens, sure, they can have 1 billion users, but maybe they're making less than a penny per year per user.
So the best advice is to let Friday be Friday, watch what happens, and then see if
Sit down with if you want to watch TV and watch this happen, or you're listening to, sit down with a soda and some popcorn and think of this as a really interesting game to play. You know, are the Avengers going to win the battle at the end of the day? Who's going to get destroyed? How much of New York City is going to get laid to waste in this process? And then when it's all over, think about why you invest. And if you invest just to have fun, yeah, you'd probably be better off in Atlantic City because your odds of making money are much higher.
All right.
If you're invest as an investor, this is something to watch, not to participate in.
All right, good advice. I appreciate the conversation. Thank you very much, Michael Kresh. All right, when we come back, Bill Corbell will have your hyperlocal forecast. We'll be right back.